Welcome and welcome back. Thanks so much for tuning in. To all those of you who are tuned in on social media, we are going to start with the queries that some of you have already sent in. And I think the one that I'm going to pick is quite an interesting one because we've seen the metals pack as a whole rally significantly over the past several months, starting in 2020, but particularly in the year 2021. So the first question comes to you, Rajesh, and this is from Santi, one of our regular viewers. He's asking, in your experience, when was the last time you saw a metal super cycle? What were the traits of that cycle? In that, how much did the price run up from the average that was then the case? And how long did this cycle last? So I think what he's trying to gauge is, we're currently supposedly in a metal super cycle. How long is this rally going to last?
The reply to this question would be a very large one. So, considering the time factor, I would just sum up in saying that rally has rally in at this point of time is in the initial stage, and I think that this is going to last for maybe another 1 or 1.5 years as such, especially in the steel sector. When was the last time I saw this? Maybe around 7-8 years back, when in 2008 market crashed and Tesco and all went into two figures, and then we all know that what happened in the next 1 year or so. Why I am basically bullish in steel, I would just sum up in 2-3 lines. That's one, Mr. Biden's focus on infrastructure development, China's production control due to their focus on reduction in carbon credits, and the ongoing demand across the world, especially India also, on infrastructure spending is going to fuel up the steel demand. And the last one would be the kind of infusion we are seeing from the central bankers across the world is fueling the commodity rally. So I think this is going to be there for some more time, and one should not worry, and every step should be taken as an opportunity to buy. If you ask about some of the picks, I would say Tata Steel, SAIL, and Industrial and Power. These three would be the preferred picks.
All right, that's the call coming in on the metal space. But let's get on board our next viewer query, and this viewer query is coming in from KR Balan from UAE, saying that it's about 500 shares of Dollar Industries at 250 rupees per share. Wants to know whether he should hold or switch. Kunal, what's your take coming in on Dollar Industries?
I think it's an average kind of a stock. Looks to be more sideways. Last 4 months or 5 months, I think from 2021 start, the stock has been more or less in the range 235. I think on the lower end of the range, and closer to 265, 275 is the upper end of the trading range for the stock. So it's more of a sideways stock, not much of a trend in the near term. So I'm sensing that if it's specifically from a near term view, you can hold on to your investments on the stock till the time it's trading above the key support level, which is around 235.
All right, Danny Verghese has got the next question, and this is Motherson Sumi at levels of 146. Should he hold or should he sell? I'm coming back to you on this one, Kunal. On the charts, basis what you're seeing, should he hold at this level for future gains, or should he book out right now?
Definitely look to increase your holdings. In fact, over here, I would suggest that you've bought at a very, very attractive price. And the best part about it is that you've managed to hold on to your investments. Now, look at the last 4 or 5 months specifically as well. That at a time when many of these auto stocks, and I'm talking the large cap auto names, likes of Maruti, etc., they were the ones which were going through a corrective phase. The auto ANC space apparently did pretty well for itself. Motherson Sumi picked up a pace from that 165, 175 zone to a new zone altogether at 245 levels. Now it's perched very close towards breaking its all-time high levels as well. So it's a stock which is strong in momentum. It's a stock which has managed to outperform major of its peers, and I'm talking the bigger peers as well. So these are classical ingredients which you look out for in terms of stocks. I would suggest a hold, and if you have additional capital, assumingly, then I would suggest even a further averaging at current levels for getting maximum upside on the holdings which you have on the stock already.
All right, our next query is coming from Sangeeta saying that she wants to know whether she should buy Colgate at this current market price for the longer term. Rajesh, what's your view coming in on Colgate? They have reported their Q4 earnings yesterday. The street did give a thumbs up to the stock yesterday, but should Sangeeta buy Colgate for the longer term?
Yes, of course. If one has a longer term horizon, stocks like Colgate, Marico, Britannia, these are always a buy in every direction. One can keep for a longer term, maybe 1 quarter. Maybe sometimes the numbers are not good, but still, I think this is a very good stock. The numbers, as you said, have been given very good, and the company is going to outperform. So I would say if you have a longer term horizon, yes, you can stay put or even add to your stock.
Okay, the next question is on Engineers India. It's currently trading at 82, and in fact, Padma has bought at just below that 1,000 shares at 1,000 shares at 80 rupees. I'm going to come across to you, Kunal, on this one. How does it look on the charts? Or what are you seeing on Engineers India? Should Padma hold on? It's had a reasonably good run over the last year or so, right? 30-odd%.
So reasonably good year, recovered quite well. But then you have to understand that if you're managing to park your money with the leaders, there is a stronger degree of safety, as well as there is also always a higher probability that you would get the higher benefits whenever the sector goes through a turnaround. So the PSU stocks overall have gained tremendously well in the last 1.5 or 2 months. Engineers India has managed to participate on and off in that short-term uptrend as well. So it's a stock which would probably fairly be dependent on, or the rally of the stock will depend more on how the entire sector pans out. I would suggest that if you can look at this as a more short-term trading play, try to book out profits over here at closer to say 88 or 90 odd levels if the stock happens to come back to those kind of levels on the upside, and then shift on to some high-quality large cap names on the PSU side. So something like maybe a Bharat Electronic at current levels, ONGC at current levels of 115, 16, I think could be attractive buys from a longer term basis as well.
Next query is coming in from Shubh Mathur saying that which PSU bank would you suggest that we enter at current levels? Rajesh, PSU banks, definitely the rally in that is quite enticing, I'm sure a lot of investors must be thinking, oh, did I miss the bus? Should I now get onto the board and buy PSU banks? But which of those PSU banks would you suggest that one should look at?
First one would be West Bank of India. We think this quarter the numbers are going to be very good. The lower provisioning. I won't be surprised if NII, net interest income, comes in, shows a growth in 2 digits. Valuations are also attractive, and it's one of the largest in the PSU space. That's going to be the first choice. The other one would be Bank of Baroda. After the acquisition of 2-3 banks, the merger of 2-3 banks, in that the size has become very big, and it's also going to show good numbers in the times to come. So I think these 2 banks should be kept an eye upon.
Coming back to you on this next one, Rajesh, Shivakumar has bought 40 shares of Route Mobile at the IPO price. And I believe that he subscribed to the IPO from the perspective of a long-term investor, right? And he intends to hold for another 5 years. Should he continue to do that? Because I think the stock has done reasonably well for itself.
Yes, it's done reasonably well, no doubt on that. They are into SP, that's into mobile advertising and all those things. They've recently hired new good hands to run up the business. And not only in India, the business is spread across the world, I would say. But still, if I look at valuation, I think it's on a stretched valuation. Any dips can be taken as an opportunity to add for a longer term, but at this point of time, anybody holding should be better off booking some profits and maybe switching to some good names like Infosys or a Wipro. Even Persistent System can be a good buy in IT space rather than going for Route Mobile.
Next query is coming in from Rajan, and this is for you, Kunal. He wants to know whether it doesn't make sense to enter Lupin at current levels or wait for some more correction with a 6 to 12 month time frame. So what's your take coming in on Lupin?
Should be bought into at current levels. Cheryl, the breakout which the stock had seen 2 weeks back, I think has been a very trend-changing breakout for the stock. It's managed to come out of almost a 5 to 6 month of consolidation. You call it underperformance as such. And the stock has already been an underperformer as compared to the other large cap peers. So whenever you see such kind of breakouts, they tend to channel the stock to a new level or new high altogether. I believe that could be a classic case for Lupin, and since the viewer has that kind of a time frame and the appetite to hold on, I would suggest to look at Lupin at current levels and look to buy or average again if the stock comes back to that 1120 point, which was the breakout zone for Lupin. So I would suggest the buy. 6 month targets, I would probably place it closer to 1300, 1350 zone for Lupin.
Okay, I want to come to you, Rajesh, on this next one, ITC, and it's a stock that a lot of retail investors have sort of been, given up on, and some of them still hold out hope. We've got Krishna, who's holding at an average price of 220, and the stock price currently not too far away from that mark. Should they continue to hold is a question.
Very bullish. In fact, I would say I have been very bullish on ITC from the last so many years, despite the fact that it has not performed well on the bourses. But performing well on the bourses and being a good company are two different things. We know better. But ITC, as we all know, is a conglomerate into FMCG, tobacco, hotels, and whatnot, even agro business. Now, if we look at numbers, a large part of revenue has started coming from FMCG, and EBITDA is also coming from FMCG, a large part of that. Even tobacco has shown volume growth in last quarter, which was a positive surprise. There was no hike of taxes in the recent budget in tobacco, as everybody feared. That again is a positive. And the best part is it has a strong balance sheet, strong brand portfolio, no debt at all, and trading at a P of less than 15 times. Being a FMCG company, trading at a P of less than 15 times, whereas others big brands are trading at a P of maybe 80, 90 times. And even the dividend yield is around 5%. Somebody who is investing for a period of 4 or 5 years, ITC is the best bet. It's as good as a bank FD.
As an email query from Jaya Krishnan from Kerala, he's saying that at what rate can I enter Bharat Rasayan for the medium term? Kunal, what's your take on Bharat Rasayan?
Well, I think I don't track the stock that often, but then I was looking at the charts for Bharat Rasayan. It's been one of the few stocks which is very, very low liquid. By that I mean the volume or the average trading volume for the stocks is very, very low. So you have to be very careful of the kind of trade you do on such kind of names. But the stock has done phenomenally well. I was looking at the long-term charts, and the stock has been an absolutely strong multi-bagger over the last 7-8 years, from being a stock which was at 100 odd rupees just about 2013-14 to a stock being at 12,800 or 13,000 levels where it's currently trading. So I think it's been a phenomenal multi-bagger in that sense. But again, the catch over here is that the stock is a low liquid in that sense. So it seems to be a good long-term story. I think in terms of entry levels, I would suggest if the stock comes back to 11,200, 11,250 levels, that could be a good starting point for you to enter, because that seems to be a multiple support zone for the stock over the short to medium term.
All right, Rajesh, I must say that my wife likes fixed deposits a lot. I should tell her about ITC and what you said about it. But Sahil Mathur's got a question on Gujarat Alkalis. Would you say that this is a good investment for the long term?
Yes, of course, Alkalis are doing very well. The product profile is very good. Even you've got good dividend. The margins have been expanding, and as we said, that we are very bullish in chemical sector as such going forward. So Gujarat Alkali, yes, at these valuations are a good buy.
All right, our next query is come from Abhishek Bhandari. Wants to know what's the long-term view coming in for Bharti Airtel. Rajesh, how is Bharti Airtel looking in the long term? Definitely seeing some pressure today due to earnings, but over the longer term, makes sense to invest in Bharti Airtel?
Of course, this pressure is just because of some OI unwinding and all, but I don't think the numbers were that bad. ARPUs have shown a stability. The numbers have been good. Even African business is doing well. And the kind of data consumption we are seeing in the present scenario and the coming days, I think this company is going to do well. And the best part is there's only two major players left, the third one being almost defunct or the numbers are being going down. Even subscriber numbers surprisingly have been more added towards Bharti. So I would say yes, it's a good buy.
Okay, we've got a short-term query. Ritesh Garg has bought, Kunal, and this is for you. Ritesh Garg has got PVR May call at a 1400 strike. He bought it today. Should he hold?
Seems to be a bit of a stretch. It could probably play out very well. Frankly, if there's any kind of a news flow which comes out, I think in the next couple of days or maybe by early next week, before we land up towards the expiry for the month. But I think it's a bit of a stretch. Frankly, 1400. The stock is at 1200, so you are expecting that the stock would probably rally up another 15% for you to get your option at the money, and then probably more upside for you to try and make profits, covering up your initial cost. So it's a bit of a stretch, frankly, looking at the kind of chart patterns. But then I would suggest that if you're looking to buy PVR, I think it's a stock which I would believe should be bought on dips, even starting from current levels. I think that level of 1000, and I mentioned this couple of weeks back as well. On the show, on many of the shows as well on the channel, that I think just around that 1000 odd level, PVR could be a very attractive buy from a slightly medium to long term perspective. So I maintain that stance, and I would suggest a buy on dips opportunity for PVR, but specifically that would be from a medium term to long term view.
All right. The next query is coming in from Indu, asking that about HDFC Life. She's holding shares which she's bought at 520 rupees. That's the average price of HDFC Life that she's bought. She's asking when is it expected to start the next round of up move? Kunal, how are the charts looking for HDFC Life? Any signal as to when can you see the next breakout come in on the stock?
Very difficult to anticipate when that breakout could happen. It generally gets triggered by either strong buying patterns which you see across the sectors or stock specific events or news flow. But then I think if you remember, I think a couple of weeks back we had done this analysis on the insurance stocks, and I had mentioned that there was a phase where HDFC Life managed to outperform start of that March 2020 zone where markets bottomed out. You saw HDFC Life outperforming, but somehow in the last 1 month, you're seeing SBI Life as well as ICICI Pru, they managed to outperform HDFC Life by a good enough margin. The behavior of these stocks have changed. You've seen a strong rally picking up into these stocks. So I would sense from a very short-term view, probably SBI Life and ICICI Pru, they could tend to outperform. But as I said, it's very difficult to anticipate when the breakout move would happen for HDFC Life. It still remains a very good quality stock. So I think you should use corrections, specifically like what you've seen the last 2-3 months, a 15 to 20% correction as good buying or averaging opportunity.
All right, gentlemen, I'm going to request you to keep your answers just a tad bit shorter because we're going to try and fit in as many as possible. This next one is for you, Kunal, and this is on Just Style. Satya has bought at levels of 900. He's wondering whether he should wait for levels of 600 to average. Is that something that is likely to happen in the near term?
Yeah, I think the major support for Just Dial is around 625, which is the 200 moving average. So if you're looking to average your holdings on Just Dial, I would suggest that wait for maybe some more correction. Let the stock come back to its 200 moving average. That would be around 625. That could be a good enough zone where you can look to average your holdings and then try and reduce your cost price.
Coming in on Asian Paints from Raghu, asking that please advise on an entry price for Asian Paints. Kunal?
I was surprised that over the last 3-4 months back, the stock had gone through a corrective phase, and it was a very slow and subtle correction for Asian Paints from 2,800 levels. I think in a matter of 1 or 2 months, it had come back to 2,300. So you're talking of almost a 20% kind of a correction on Asian Paints, which is very rare, frankly, to see on this stock. So it's a quality name. I think you should start buying at current levels, specifically if your view is long term. And if you happen to be lucky and you get another 20% correction into the stock price, like what you did, what you saw in the last 3-4 months back, I think that should be taken as good averaging opportunities.
Rajesh, this one's for you. Kota has got a question on Alkyl Amine. Would you buy it based on the fundamentals?
Fundamentals are very strong. Both the divisions are doing well. The numbers that came last fortnight were surprisingly very positive. Yes, the stock has run up quite a lot in the recent past. I would say wait for some correction to enter, and for a longer term horizon, it's a very good stock.
Next query is from Sagar. He wants a view on Bayer Crop Sciences. He's thinking of making a fresh entry for a swing with the target of 6,000 rupees plus. Is it possible, Kunal? Bayer Crop is the stock name.
So again, a stock first, caveat that it's again a low liquid stock. The average trading volume is just about in paltry, I think 10,000 or 15,000 on an average. Just be very careful and cautious in that regards. But yeah, I think it's nudging towards a breakout of 200 moving average. I would suggest that if you're looking to buy the stock, let it confirm this breakout above this 200 moving average. 5,500 approximately is that level for the stock. So you have to be very patient and let the stock break out above those resistances. Only then I would suggest that it could probably come back to a swing high of 6,000 plus levels, which you're anticipating. So I would suggest a buy, but only above 5,500 breakout level.
L&T Tech is the next counter that we're talking about. Bought it at levels of 2575, Kunal. Should they hold for less than a year? This is from Ravi.
Yes, I think you should hold on to this stock. I think it's been phenomenal. It's done phenomenally well over the last 12 months. Many of these IT stocks and IT-enabled services stocks have done exceptionally well. Same is the case with L&T Tech as well. But again, just have some powder dry so that you can make use of corrections which happens along the way. The markets move; they tend to move in sectors and they tend to move in stages. And you probably would see a phase where the markets would get back into risk-on mode, and many of these IT stocks would come into a slight corrective phase. So take use or make use of the opportunity. If you see a correction and the stock coming back to say 2,250, 2,300 levels, that should be taken as good averaging opportunity for L&T Tech.
All right, with that, we come to an end of our query segment. Thank you, Kunal, as well as Rajesh, for joining us in the show, giving us your pick, and also resolving the queries. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now, but stay tuned, more on the other side, so better don't go anywhere.
Co-powered by LG Refrigerators. More than fresh, farm fresh.